Welcome back to the Algobot channel, where we take apart automated trading strategies and study how they actually work. I'm Algobot, and in today's lesson we're examining an expert advisor for MetaTrader 5 called the Bollinger Stoch Session Scalper. As the name suggests, it brings together Bollinger Bands, the RSI, and the stochastic oscillator into a single, session-gated mean reversion approach designed for lower time frames. Over the next few minutes, you'll learn the exact conditions it looks for, how it manages a trade once one is open, and how to read the logic directly in the code. Remember, this is educational analysis only, not financial advice. Let's begin. So what does this expert advisor actually do? At its heart, the Bollinger Stoch Session Scalper is a mean reversion strategy. Mean reversion is the idea that on lower time frames, price often stretches too far, too fast, away from its recent average, and then tends to snap back toward that average. This approach aims to identify those stretched moments and position for the pullback toward the middle. To do that, it leans on three well-known indicators working together. Bollinger Bands measure how far price has traveled from its moving average in terms of volatility. The RSI, or Relative Strength Index, gauges whether momentum has become stretched. And the stochastic oscillator watches for the moment that momentum begins to turn back from an extreme. The strategy only acts when all three line up, which is a deliberate filter meant to keep it out of strong, one-directional trends, the situation where a fade approach tends to struggle most. There's a fourth ingredient that's easy to overlook, and that's time. The strategy only opens new trades inside a configurable trading session window, defined in UTC hours. The default window runs from the 7th hour to the 20th hour, covering the more liquid European and overlapping sessions. The reasoning is that thin, low-liquidity hours tend to produce the false stretches that can trap reversion systems. In terms of who this style of analysis speaks to, it's built with short-term, lower time-frame foreign exchange trading in mind. Think 5-minute and 15-minute charts on a pair like Eurist. It's an educational example of how several independent filters can be combined into one clear rule set. As always, no indicator or combination of indicators removes risk, and losing trades are a normal and expected part of any strategy. Let's walk through the mechanics step by step. First, timing. The strategy checks for new entries once per closed bar, not on every price tick. When a bar closes, it recalculates every indicator on that finished bar, so its decisions are based on completed information rather than a flickering, unfinished candle. Now the entry conditions. For a long or buy setup, three things must all be true on that closed bar at the same time. 1. The bar's close must sit at or below the lower Bollinger Band, meaning price has stretched below its volatility envelope. 2. The RSI must be below its oversold threshold, which defaults to 35, confirming that downside momentum is already stretched. 3. The stochastic %K line must be below its oversold level, which defaults to 25, and %K must be above the %D line. In other words, the oscillator has started curling back up. When all three agree, the strategy signals a buy. The short, or sell, setup is the mirror image. The close must sit at or above the upper Bollinger Band. The RSI must be above its overbought threshold, defaulting to 65, and the stochastic %K must be above its overbought level of 75 while turning back down below %D. When those align, the strategy signals a sell. Once a position is open, risk is defined immediately using the average true range, or ATR, which is a measure of recent volatility. The stop loss is placed a distance of ATR stop multiple times ATR away from entry, 1.5 times ATR by default. The take profit is placed AtrTp multiple times ATR away, 2 times ATR by default. That gives a target larger than the initial risk, a reward-to-risk profile of roughly 1.33 to 1. Two more rules are worth noting. The strategy holds only one position at a time for its magic number, so it never stacks trades on top of each other. And it uses a smart trailing stop. Once price has traveled trail start multiple times ATR in your favor, the stop begins to ratchet to trail multiple times ATR behind price. Importantly, the stop only ever moves in the protective direction, it never loosens. Trade management, including this trailing logic, runs on every tick and continues even outside the session window, so an open trade is always being looked after. Let's read the strategy directly in the code, the way you'd see it in MetaEditor. At the top are the input parameters, the settings you can adjust before running. You can see the Bollinger period of 20 and 2 standard deviations, the RSI period with its oversold and overbought thresholds of 35 and 65, the stochastic periods with its oversold and overbought levels of 25 and 75, the ATR period, the ATR stop and target multiples of 1.5 and 2, the session hours in UTC, and the fixed lot size. Below the inputs are the two conditions that define every trade. The long signal is true when the close is at or below the lower band. The RSI is under its oversold level, and the stochastic %K is under its oversold level while sitting above %D. The short signal is the exact mirror, close at or above the upper band, RSI above overbought, and %K above its overbought level while sitting below %D. When the long signal is true, the code reads the ask price as the entry, sets the stop loss 1 ATR stop multiple below entry, sets the take profit 2 ATR target multiples above, and dispatches a buy order. When the short signal is true instead, it reads the bid price, places the stop above entry, the take profit below, and dispatches a sell order. Both paths funnel into the same send function, which simply calls trade.buy or trade.sell with the fixed lot size and those calculated stop and target levels. It's clean, symmetric, and easy to audit. Let's bring the logic to life on this illustration. Across the top, you can see price as candlesticks, with the Bollinger Bands wrapping around them, the upper band above, the middle band through the center, and the lower band below. In the panel underneath is the stochastic oscillator, with its %K and %D lines, an oversold zone marked at 25, and an overbought zone marked at 75. Watch the left side first. Price is drifting lower, candle after candle, pushing down toward the lower band. In the panel below, the stochastic is sliding down with it, dropping into that green oversold zone. On its own, that's not enough, because plenty of markets keep falling while looking oversold. Now look at the entry candle. Price closes right at the lower band, poking below the volatility envelope. At that same moment, the RSI is reading oversold, and in the panel the stochastic %K has hooked back up above the %D line while still deep in the oversold zone. That is the snapback beginning. All three conditions agree, and the buy entry marker appears. The stop loss is set a fixed ATR distance below, just under that fresh low, and the take profit target is set a larger ATR distance above. Follow what happens next. Price stops falling and begins to revert toward the middle band. Exactly the behavior this approach is built around. Candle by candle it climbs, and in the panel the stochastic rises up through the midline toward the overbought zone. As price travels far enough in favor, the trailing stop arms and starts ratcheting up behind price, protecting the move as it develops. A few candles later, price reaches the take profit target, and the take profit marker completes the long trade. Now the market does something interesting. It keeps pushing higher into a stretch on the other side. Price rallies up and pokes above the upper band, and here we can see the value of the confluence filter. On one candle the price pierces the upper band, but the stochastic is still rising, so no short appears. The strategy simply waits. Then comes the reversal candle. Price prints a fresh high, then closes back down, right at or above the upper band. The RSI is now reading overbought, and crucially, in the panel the stochastic %K has curled back down below the %D line while still up in the overbought zone. That's the mirror image signal, and the sell entry marker appears. This time the stop loss sits a fixed ATR distance above, just over that fresh high, and the take profit target is placed a larger ATR distance below. From there, price rolls over and reverts back down toward the mean, just as the fade anticipated. The candles step lower, the stochastic falls back through its range, and price reaches the downside take profit target, where the final marker completes the short trade. Notice the shape of both trades. In each case, the strategy waited for price to stretch beyond its band, for momentum to read stretched on the RSI, and for the stochastic to actually begin turning back before committing. That third condition, the turn rather than just the extreme, is what separates this from blindly buying every dip or selling every rally. And in each case, the take profit target was set larger than the initial stop distance, giving that reward to risk profile we discussed earlier. Of course, this is a clean, illustrative example. Real charts are messy. Not every setup reaches its target, and losing trades are an ordinary part of trading. The point here is simply to see how the rules fit together into one repeatable pattern. And that brings us to the end of our breakdown of the Bollinger Stoch Session Scalper. We covered what mean reversion means, how the strategy combines Bollinger Bands, the RSI, and the stochastic oscillator into a triple confluence filter, how it gates its entries to a liquid session window, and how it manages risk with ATR-based stops, targets, and a ratcheting trailing stop. We also read the core logic directly in the MQL5 code and watched an example play out on the chart. Everything here is educational information only, and nothing in this video is financial advice or a recommendation to trade. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to examine next, and subscribe for more MT5 strategy breakdowns. You can find more over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.